welcome to the Trading Room. This is Rob Reinhold. I'm joined by Mr. Darren Fisher, and this is kind of a monumentous trading room because, Darren, this is going to be your last regular trading room with us. Darren is leaving to start his own hedge fund. We wish him the best. Darren, what's in the future for you?
Yeah, thanks, Rob. I mean, I've been at Maverick for 13 years. I've been the CEO for 5. I really appreciate the opportunities that you and Maverick as a whole has given me. It's been great to be able to get out in front of traders, share my knowledge, talk about the markets. I'm just at a point in my path that it's time to go do something different. So I've wanted to do a hedge fund for a while. I've got the opportunity right now, and that's the way we're going to take it. I'm still going to be a Maverick. I'm going to be a Maverick at heart. You're going to see me occasionally, more guest appearances than anything else. But I'm looking forward to the next steps. And Maverick is always going to be a part of my life.
Well, Darren, we are very excited for you and just wish you nothing but the best. Let's get into this trading room. In this session, we are going to go through the previous week. We're going to break down the news. We're going to take a look at the broad markets. And then we are going to score everything. We're going to score the markets. See, did we have an actual scoring change this week? And then we break down all the sectors and score each sector. We're going to take a look at some of the best trade setups in the best sectors for the week ahead.
Disclaimer. This video was created for professional stock and option traders. Maverick Trading is a proprietary trading firm that employs professional traders around the world. Our traders trade firm capital and keep 70 to 80% of profits they generate. All trades and analysis in this video are for professional traders only. If you are interested in becoming a professional trader for Maverick, click the Apply button in the video description. Let's get ready for the week.
Let's break down last week's news and last week's numbers. So what we saw last week is if you remember last week, we had a really nasty week and then we had a green candle on Friday. And we talked about how there being a likelihood that we're going to bounce up to the former resistance level where we are going to test that resistance. Well, we got that. We got a bounce early in the week, and it really was in this anticipation of NVIDIA earnings. And their earnings were phenomenal. I've never heard a CEO say that the demand for their product was tremendous. That is like the craziest thing. And the stock took off, and after hours and overnight, it was just strong. In the morning, the market gapped up and then lost it all. And actually just lost more than all of it. Lost all the gains and put on another negative 1.5% off of the selling. Now, that is what's called an exhaustion move. When something has had a nice run, which NVIDIA's had a very nice run, you get the earnings, and then it gaps up and fails miserably. All it means is that this was priced for perfection. And they hit perfection. And hats off to NVIDIA. But guess what? It was priced for perfection. There's no buyers after that. There needs to be people that say, oh my gosh, that was better than we expected, to have buyers after that. There were no buyers, and it just is showing you there's some signs of exhaustion in these tech stocks. The bullishness is already priced in. Last week, we said that the bond market is going to move this market, and sure enough, it did. The days when the bond market was weak, the market was able to rally. The days where the bond market was strong, the market struggled a little bit, and we settled right at 4.2%. If we take a look at last week's economic news, there really wasn't much on the table. I do want to point out durable goods. The headline durable goods orders was down 5.2%. But when you strip out transportation, it is actually up 0.5%, much stronger than anticipated. So we continue to have these stronger than expected economic numbers. And then the big news last week was Powell at the Jackson Hole Symposium. And he came out and basically said, look, there was no big surprise, and the market was ready for a surprise. The market was poised for it. And Powell came out and basically was right in the middle, saying, hey, things look good. Inflation could still be going higher. It could still be going lower. And in the end, the market was basically just up a little bit on Friday. So I think this Fed is right where they want to be. things are cooling down, but they're not crashing. What did you take from Powell's speech, Darren?
No, it's about the same. If I still think we've priced in one more rate hike after Powell's speech, though. I think we might see another one before the end of a second one before the end of the year. That, as I was reading the tea leaves and reading between the lines and, throwing my dice, that's what I got out of it. That we're definitely priced in at one rate hike, and there's a second probable one that I don't think the market is really pricing in right now. But that's what I got.
I think you're right. And it really, if this economic news keeps doing what it's doing, Chairman Powell said that housing is starting to pick up again. Like, the housing market was one of the biggest drivers of inflation. And they went in and just killed it with the rates and just really hurt it. And there was a little bit of a pause in housing in 2022. Housing is back to being really strong in 23. And it's one of the things they're worried about. So here we are right in the middle. They've slowed inflation down, but they are definitely still worried about it. What did the market think about it? At the end of the day, it was basically where it started. So it looks like the market is priced correctly at the moment. Let's take a look at last week's trades, and then we're going to break down the week. So some of the trades we had last week, we had this short on Paramount, and you can see it did really well to the downside. It lost 2.5% for the week and closed on the low on Friday when the market actually had a decent day in the market. We have a 14-15 bear call spread, so this is looking really good, but we definitely need some more downside action in Paramount. Next one was a long on CF Industries. We said, oh, we like that pullback. We like this price action. And it said, guess what? You're wrong. Rolled over and died. So I know I closed out my diagonal call spread. Most of the time I hold on to my diagonal call spreads, but when they break the 50-day moving average, that is my sell point. So this one was a loss for sure. We had a sideways trade on Fastenal, and look, it did exactly what we wanted it to do. I think the industrial sector is a good place to look for sideways to bullish trades. The industrial sector, look, it's not great. Nothing's great right now. But when you take a look at all the sectors, it looks like this is the place to be in Fastenal. And Apache, we were looking at this saying, hey, we like this little high base sitting up here. And it didn't hold the base. It had this pullback, but take a look at the candles here. We have some pretty decent candles here off this pullback down to this last little resistance area. This is different. Remember, we just looked at CF Industries. It broke the 50, it broke the 20, it broke everything. And really had all red candles last week. Apache had a pullback, but you can see this is different price action. So I have a diagonal call spread on this one, and this one still looks quite fine to me. So this one looks satisfactory. Look, we would like to be profitable, but we always can't get our way on our trades. Many people are unfamiliar with exactly what proprietary trading is. Prop trading is when a private firm hires traders like you to trade with their capital. Those traders are paid a percentage of the profits that they generate for the firm. Profitable traders are awarded higher and higher levels of capital to trade so they can take bigger positions and make more money. We've been in business for over 25 years, and we're one of the oldest prop firms based in the USA. If you would like to look into being a trader for Maverick, look in the video description below and click on the trader position to apply. So let's jump into the market numbers last week. Last week we had a slightly up week. The Dow was down 0.5%, but the S&P was up 0.79%. The Qs had a decent bounce back, thanks to NVIDIA. Russell was negative. Oil was negative. Gold was positive. Look, this is just a messy, messy board here to where some stuff went up, some stuff went down. But if you really take a look at it, most stuff was just unchanged for the week. Let's take a look at the charts. Now, I already know what you were seeing here, that big old red, nasty, bearish engulfing candle on Thursday. I did the Thursday end of day video, and I said, look, Friday's candle will either say this market is going to tank, or this market is just going to remain slightly weak. At the beginning of the day, this was a big old fat red candle. We had a big red candle from here on down, and I was thinking, oh, if it closes like this, this low is going to be taken out. And then we're heading down to some prior lows here in the SPX. However, you can see that it rebounded. This candle didn't make anyone happy. If you were very bearish, you hated this candle. If you've been very bullish, yes, this was a recovery, but you didn't pierce any key levels. This is a sign here to me that this market is just kind of sitting here in this area. Ultimately, I do think we head lower based on the technicals, but I don't see the market in a real hurry to go down with this Friday candle. What do you think, Darren?
I'm seeing right now, I'm with you. I mean, I did not have that extreme of a bearish engulfing candle on my dance card on Thursday. But looking at the week and last week in totality, I think we're setting up for a low base between that 435 and 445 area. And the next, we could be in this base for a month. And then, but if there's no impetus to the upside, I think the next move is down. Now, there's no economic news on the horizon. We talked about this last week. This is a market in search of a reason to go down that the talking heads can attribute it to. But the selling pressure has been there for all of August, and it does not look like it wants to let up. So I think we base go sideways here, a little bit of volatility, but I think the next move is to the downside.
I will totally agree with that. The market, like I said, it has these little bounces, but when you take a look at the totality of what we've seen, everything's getting sold. Every rally is getting sold. Until we see that not every rally is getting sold, I do agree with you. I think the impetus is to the downside. That being said, here we are. We're in the last week of August. Typically, August is a fairly boring month. This August has not been boring whatsoever. Here we are, the last week of August. We're going into the Labor Day weekend. And so typically, volatility picks up a little bit after Labor Day. So at least for this week, I think this week is a throwaway week. I don't think we're going to go anywhere. I think it's possible we make a move one way or the other after Labor Day. But for this week, to me, this is as sideways as a week possibly gets. So taking a look here, we got the 10-year government bonds. We pulled back to our breakout point. 420 was long-term resistance. We broke out of that. We pulled back. I don't see new highs above 4.3. I just see a bunch of sideways here on bonds. This week, I am very comfortable and confident about this being a fairly dull week. Now, look, I've said all these words before and been completely and utterly wrong. I might be wrong this time, but this week, to me, says mostly sideways. So when we take a look at what the market outlook is saying, it's no longer bullish. It's not quite bearish yet. Yes, we're definitely tilted to the bearish side. But can you go aggressively short here? The answer is no. The answer is no. We're just not there yet. We are heading into September. If you are just itching to go short and you're saying, I know we're going to fall, why don't you wait a week? Just wait a week. Seasonality patterns are going to be in your favor. Remember, seasonality patterns aren't a guarantee. They're just what happens the majority of the time. But other than that, look, just wait it out. If you want to be really short, just wait a week until we get into better seasonality patterns for you. And of course, bond yields are key. If we break out above that 4.35, this market will take another leg lower. There's no question about it. Typically, I would say that this is going to be a very quiet week. I think we're going to go sideways. That being said, there are some news events on this calendar that could really change that. This is not on this calendar, but on Wednesday night is China's PMI. The Chinese numbers have started to get really ugly again. They were ugly last year, and they perked up a little bit, and everyone was getting a little bit excited that China was back. And over the last couple of months, the numbers have gotten really bad again. The central bank had to cut rates. I think this China PMI number on Wednesday night's a big deal. If we get some crazy numbers, either stronger or weaker, I could be completely wrong on my call of this being a boring week. On Thursday, we have the core PCE price index. Now, during Chairman Powell's speech, it was I don't know if it was a slip of the tongue or if he already has this report, but he basically said that the core CPE price index is moderating nicely this month. He may have given away that he already has the numbers here. Okay, Thursday, 8:30, core PCE. This is usually a big number. Maybe it's not that big of a number now that Powell has let the cat out of the bag. The next day, though, we do have payrolls. And take a look at the payroll report. They're looking for 165,000 jobs. That is a moderately growing workforce. I want to say population growth is around 100,000 jobs needed for a month just to keep up with population growth. Last year, we were up in the 500,000, 600,000, 700,000 jobs created. So there's no question that employment is definitely cooling off. That being said, we're at 3.5% unemployment. You can't go much lower than that. So, this number, if it's a little bit higher, I don't think the market freaks out. If it's a little bit lower, I don't think the market freaks out. I don't think this report has much movement here this week. Darren, do you have any opinion on that payrolls report on Friday?
I think you've got to go into and look at the labor participation rate because, I was always taught in high school that 5% unemployment was about peak unemployment because you always got people looking for different jobs. But what's happened over the past 20 years is that, mostly since about 2008, that labor participation rate has been steadily declining. So that to me is a more important number. But that's just me. This is just cocktail talk between you and me. The markets might be looking at the headline unemployment rate. But I always look at that labor participation rate. And you can see, our weekly outlook right now is at a 0. Now, that's not to say it's going to be no movement at all. We could, we're going to be in my opinion, a nice 10-point range on the S&P to go sideways. So it's a 0 overall, but I think we've got some volatility coming in there as well. Now, depending on what happens, that 20-period moving average is going to cross below the 50 probably Monday or Tuesday, and then you've really got to take a look at your expectations. That could put us into the negative 2.5 on the monthly outlook right now. Right now we're at about a 1.5, but that's counting on us moving sideways. So if we, there is some psychological bias in this, and as long as we recognize that, then that's fine. But if we were to look at this purely technically, we're at a solid -2, and next week, purely technically, we could be at a -3. But I think, just based on experience, I think we do go sideways.
So I agree. 0 with volatility is the call for the week. All right, let's run down the sectors.
Have you been trading in the markets for at least 2 years? Are you starting to see some decent progress? Is that progress so small because of your limited account size? Maverick Trading is a prop firm that provides capital to profitable traders. You trade a minimum $25,000 account and keep 70 to 80% of the profits. After 2 consecutive profitable months, you move to a $50,000 account. As you keep progressing, you will be able to trade 6- and 7-figure accounts. To learn more about trading for Maverick Trading, either click on the Apply card in the top left, click Apply at the end screen, or click the link in the description to watch our recruiting video that explains more about Maverick and prop trading. If you like what you see, apply for a position and meet with our recruiters. Are you our next trader?
Yeah, this is one of my easiest days to run the sectors. You can see that overall we really went nowhere in 6 of the sectors. The only places with 7 of the sectors. The only place we had movement: technology to the upside, 2.25%. Consumer was up 1.25. Energy was down 1.25 right here. But everything else sub 1% moves. But that did come with some volatility right there. So the market outlook didn't change a whole lot. I'm still at -3 on utilities right now. This is a low base. Do I think we're going to get the total breakdown here in this next week? No, but if If we do move down, I think we move to the downside, especially if rates spike, utilities are toast. So I would be looking to them for some pretty good shorts. This is the weakest sector that we're looking at right now. Same communication services unchanged at -2. If you'd talked to me on Wednesday, I'd have said, okay, we're up in the 0 area. Again, if you take a look at Thursday's candle, but then take a look at Friday's candle, nobody likes these candles like that. You've got that bearish engulfing followed by something with a long, almost a high wave right there with a long lower shadow right there. You're thinking, okay, where does this go? To me, it just, again, it looks range bound. Okay, their buyers are coming in when it looks necessary, but the sellers are sitting right there, ready to take advantage. Hey, you want to pop the price up a couple of bucks? Go right ahead. I'll sell into it. And then it gets down there, and the buyers are going to come in. So it's setting for very volatile sideways action right here. Communication services, real estate still at -2. This one's looking a little bit weaker. Okay, you've got now Thursday did not look as bad in real estate, but you look at that long upper shadow, and you see the sellers did come in right there. And Friday's candle, just a doji right there. So I think real estate actually has some room to go to the downside, about that 35 area for the whole sector. So this, to me, I mean, I'd have to call this just a bear rally in real estate. So this could turn into a -3, very, very quickly. But again, real estate is dependent on the bond prices. So they'll move almost in tandem with utilities. Looking at industrials, -1. And we talked about this last week. When everything looks weak, you just kind of have to look at what is the least worst. And sometimes that just means how close is it to the 50? It's below the 50-period moving average, but how close below the 50 is it? And, industrials is one of the better performers at a -1. But again, you look at this action, it just looks like it wants to go sideways in a very shallow low base right there. Looking at healthcare, again, I didn't have to do much here. This is a 0. It's stuck between the 50 and the 20. But again, it's looking like everything wants to go sideways here before we can make a determination. Now, you take a look at healthcare between July and August. We're in a pretty decent range right there. Now, we're at the lower end of the range, so we could this could just be some room to the upside. There's nothing in healthcare that tells me it wants to break above that 136 level, but you could make some short-term gains if it bounces up from here. You could get some, if you want to do some short-term trades and healthcare catches a bid and gets to the upper end of that range, I think that's a pretty good place to be as well. Financials, again, no change in a -1. It looks just like industrials, pretty close to that 50-period moving average, but it's below it. We're basing sideways in a mildly bearish environment right here. Consumer, -2. Now, you see that 20 did cross through that 50-period moving average right there. So if we break below that 160 level, 161 level right there, this goes to a -3. This is a very temperamental sector. I mean, you can see 2 months ago, this would have been at a +3. And now we're sitting here at a -2, looking to see if we break down and go to a -3 right here. So this is a very temperamental sector. Just be aware of that. Again, some short to midterm trades. I wouldn't be looking at any 3 or 4 month position trades in consumer, but I think that 2 to 3 week period is probably a good place to be. Looking at tech, despite NVIDIA, I mean, you can take a look at this right here. It's still a -2. It had a decent candle on Friday, but it didn't break through. I mean, one of my key areas that I look at, you take a look at that bearish engulfing on Thursday. If you can't break through at least half of that movement, then I think you have to say you're still weak. Until we can break through that area, until about the 170 level, you have to see the momentum is to the downside. With over the next couple of weeks, we might get up to that 170 level, but if we roll over from there, I would not be surprised. Taking a look at materials, Again, a -2. I mean, this just kind of went nowhere. You saw what the charts did. It's still -2. Look at that cross though. Next week, if we still get this, that 20 is going to cross through that 50, which is really just going to put more pressure to the downside. I actually think that materials holds in and just bases. There's a lot of stuff going on. Again, I mean, you go back a couple of months, we were at a month, we were at a +2 environment. We just lost everything. So there's been a lot of buying in here. We've got a lot of support going back into June right there. So we're at it, at that support level right there. I think this actually does hold in. It just looks a little bit weak. The only change I had to make was in energy, and it went from a +2 to a +1. Oil was down. Energy sector was down about 1 1/3. It's still bullish. We're sitting right at the 20-period moving average, well above the 50. So let's just call this mildly bullish right now. We've got a little bit to crawl back to get up to a +2 again. So look at everything. Utilities looks the worst at a -3. We've got materials, consumer, tech, real estate, and communication services are still not looking good at a -2. Financials, industrials, just mildly bearish at a -1. Healthcare is at solid 0. And energy is the only thing that I'd be looking for some decent bulls in at a +1. So let's take a look at some potential trades right now. Okay, in the utility sector, we're looking at Sempra Energy, SRE, and we're going to say this is going to be sideways to bearish. So we're in a channel right now. Up to 72 is the top, 70 is the low point right here. We come up, we've hit it, and we bounce down. Now, you're looking, how do you want to play this? I think you've got to play it in a butterfly, but it's going to be a targeted butterfly. Give yourself a good, out to September 15th, that 67.50, 70 for the midpoint, and 72.50 for your lower end. I think we float down there. Now, one thing I would do is if we do float down to that 70 area, take off half your position and let the other half run. There's nothing wrong with taking off half the position on a targeted butterfly and wait to see where the rest goes. Look at real estate as well. Look at Host Hotels, nice low base. We had the breakdown of that low base on Friday. Despite the market action, Host Hotels said, nope, I don't want to participate. How do you want to play this? Give yourself a few weeks, just a $1 strike, 15, 16 bear call spread. This is going to be about a 1-to-1 reward risk, but you are going to be positive theta. So I like this one just to the downside.
And as Darren mentioned, the healthcare sector, it doesn't look great, but when you weigh it against everything else, it's holding in there quite nicely in that range. So I definitely want to be overweight a little bullish here. And here, this one popped up on my screener. That's why we love screeners. I have no idea what this company is. I've never heard of it before, but here we have ABCAM PLC. It's a UK company. And the thing I love about this is we've got this huge run that went from 16 all the way up to 25. Now, that's like a 40% run. And after that, it high based here. And it just got a little bit weaker. Now, remember, during this period of time, the market has just been tanking here. And this one's just been working down a little bit, just working down, working off a little bit of its excess run. Finally found its bottom here, and now we're back up above certain levels. I would have liked a little bit better close, up to maybe this 24 area, but we've got this long kind of bull pullback, and I loved the volume. The volume was the one that really said, hey, this thing might be ready to go. I think this thing could potentially break out above 25. Now, if you're looking to be more bullish, I actually took these long calls. Now, look, I will take these long calls, but I will put a vertical on this in a second if I don't think it's going to go. So I'm looking at this 20 calls, but if we don't really go anywhere, I'm going to be selling these 25s. I'll sell those 25s and say, hey, bring me in a little bit of credit to offset my cost. If we get up to this 24 area and we fail, I'll be doing the same thing. I'll be selling these 25s to bring in a little of capital. But let's say we do get a little bounce next week. I really think this one could be the ones that takes off and makes a run up to the 27, 28 area, which is why I have the long calls to begin.
Rob, looking at that candle on Friday, this is screaming potential short squeeze to me. I can't articulate exactly why, but you see that long upper shadow. There's still strength there. And it looks to me like the short sellers just came in and said, no, we're going to knock this down. But I think the long calls are the right way to go, because just looking at this chart, I think a short squeeze is quite a possibility here in the next couple of weeks.
Absolutely. Yeah, this is why we're talking about this one, because this was a monumental run. And again, the shorts are taking shorts here thinking, oh, it's going to lose half of its value. And they're just trying to hammer this down. And look how strong it was. Look how stubborn this has been. We got a little bit of real selling here. But then once it got through that real selling, we've seen nothing but buying here. So it's why I did the long calls initially. If we don't get that huge squeeze that you think is going to happen, that I think is going to happen, then I'll go ahead and moderate this trade with a vertical spread. The industrial sector, I think, is a sector that you can be sideways to slightly bullish in. It's one of the sectors, it's a -1, but it's way better than the -2s and the -3s. This year is Emerson Electric. And you can see here, the big question is the base. When does this break out of the base? Does it break out of the base? I'm going to play this with a diagonal call spread. So I'm going to be taking a look at the September 22nd 95 calls. And I'm going to sell this Friday's 100 against it. So this is just going to create me a risk graph. It says, okay, if it hangs out above 96, I'm going to be just fine. I'm going to be just fine. If it runs to 100, I'm going to have a really nice return. If it takes off past 100, okay, well, it's not so great anymore, but I still make some money. So again, this is a bi-directional trade. If it goes sideways, it's profitable. If it goes up a little bit, it's profitable. If it goes up a lot, it's not quite as profitable. But this is how I want to play this Emerson Electric.
All right, let's take a look in the financial sector right here. We're looking at the DFS, Discover Financial Services. And this is, you can call it a very weak bear rally in a low base. And you see it had bad news, gap down, tried to base for a little bit right there. More bad news, gap down again. And it's just based, it can't get out of its own way. Despite the market action on Friday, it's still looking very, very weak. You've got to remember that except for Thursday, the markets were fairly strong and jumping up and regaining some stuff. So how do you want to play this? I'm going to go out to September 22nd, go those 95 puts, and then I'm going to sell the September 1st 90 puts against it. So I'm just expecting it to go sideways. It's going to give me a pretty good risk graph right there. If it just hangs out at that 88 area, I'm looking fine. If it goes down a little bit, I can decide what to do with it. But I think a diagonal put spread is the way to go on this. That's also going to help. You got to take a look at the puts. These puts are probably going to be a little bit pricey because of the volatility that is priced into them. So go into some sort of a spread. So in conclusion here, we've got a neutral to bearish outlook. And the big question is, are the September blues going to come this year, or did they come early in August? That remains to be seen. Take a look at seasonality. Rob, like you said, I have no problem anyone sitting out a week and just taking, grabbing some popcorn and see what's going to happen. We said this before, if the broad markets aren't telling you what's going on, focus on the sector strength and sector weakness. I think the broad markets are telling you what's going on, but when they get muddied, that's the way to go. You can see there's a lot of stuff that looks just very weak, but don't get too far out over it. Okay, if you want to be skewed bearish, that's good, but look at some stuff that is sideways to bearish as well. Energy still looks the best place to be bullish right now. As always, don't handicap your positions by thinking what they're going to do, position size for max loss and everything, and make sure that max loss is consistent across the board.
If you guys want to share some other trades, you guys know where to go, Mavericks. Go to the website, log in, go to our forum, and share other trades with other traders. Well, that wraps up this week of the trading room. Remember, next week is a holiday. Monday is Labor Day, so the markets are closed here in the U.S. Everyone have a great weekend, and take care. Goodbye, everyone.
Good trading, everyone.